Good afternoon. This is Brandon here from Beast Mode Trading. I wanted to give a little basic teaching lesson on the stock option side, kind of how we trade the stock options, walk you through the process here that we do daily. We have a little, we're going to help Kim out today. So Kim, are you paying attention?
I am paying attention.
Awesome stuff. All right. So every day we're paid to be patient for our proper trade setups. And first thing we see is we see a chart. We watch the SPY. This is on a simulated trading account just for teaching purposes, just to kind of walk you through and give you a better idea of what a stock option is, how we trade it, and how to extract money daily with our signals. So every morning we come to our computer at 9:30. We're just going to pretend that it's 9:30 right now. We'll say the markets open up, and we sit here and we wait, and we wait for our signal. So while we're waiting for our signal, we understand the trend, the side that we're trying to trade on. So we're going to bring up the trade tab. And what you're going to see here is you're going to see these these 5 tabs here on TOS. We trade stock options. This video is a teaching lesson on the stock option side. So we're going to go to the option chain and open that up. Real quick, basic, simple video. We have the option chain here, all different dates. They're expiration dates. I look at the option chain kind of like a bag of chips. You can buy a bag of chips for September 4th, which is today, September 4th, and they'll expire today. And then next week, next Monday, it's Labor Day, so we're closed. So next Tuesday would be the 8th, and we have an expiration there. SPY, they have weekly expirations, Monday, Wednesdays, and Fridays typically. Sometimes with holidays, that can dictate when exactly the expiration is. So here at Beast Mode Trading, we trade the same day expiration or the following day. Meaning on Mondays, Wednesdays, and Fridays, we trade Monday, Wednesdays, and Fridays expiration. And Tuesdays and Thursdays, we trade the following day. So on Tuesday, we're going to trade Wednesday, and Thursday, we're going to trade Friday's expiration because we're forced to. And if we trade another asset outside of SPY, we'll try to do weekly expirations. So, all right. So we have different dates here. Knowing that today's the 4th, we're going to dive into September 4th option chain. It expires today. And here we're going to go over a couple basic things that you should be familiar with on the option side. You see a strike number here, and it goes down 312, and you could scroll down here. And on this example, it goes to 361. What the strike means is that you have a bag of chips at 312 level. You have a bag of chips. All these numbers are bags of chips per se in this example. So the strike is just the desired option contract that you're specifically trying to target. On the left-hand side, you see an upward shadow is purple, and the lower half is black. The purple, they're considered in the money stock options. When they're out of the money, they're going to be black. What makes an option in the money and out of the money? Great question. So if you come up here to SPY, you see the share price. This price will consistently change. It's a floating price. It constantly changes value every second, every minute throughout the day. And at the desired time that we're looking at it right here, right now, the share price is $338.20. All right. So it'll keep floating, and you'll see it flicker. We trade SPY because the liquidity, it's easy for us all to get into. So then that brings us to our next part about what makes it in the money. The price here is $338.15. So if you come down here to the 338 strike on this side, you're in the money. And over here would be the 339 strike, and that's in the money. So the left-hand side is what we call calls. You're essentially buying it, and when the share price increases in value or goes up, we profit from that. When the share price decreases in value or goes down, we want to trade puts, and we can make money from that. So if we buy a put stock option and price goes down, we get the profit from that. And if we buy a call stock option and price goes up, we get paid from that. That's why I think it's very wise to day trade. It's a great way to extract money daily if you know what you're doing and you have proper risk management in the system. So Within the option chain, which this is today's option chain, you know that the left-hand side is the calls, the right-hand side is the puts, and we can make money either way. At any given time, you can purchase a stock option, and you could sell it back in 30 seconds. You could sell it back in 3 hours. But at 4:15 p.m., all these stock options will either expire in the money or out of the money. And if you're out of the money still holding it, you're not going to get any credit for that. So as day traders, people would say we're risky. I would beg to differ because we have a very high calculated plan, you know. But that's just my opinion, and that's I'm going with it. All right. So the next step is we know the share price, we know the calls, we know the puts, we see the strikes. All right. Now you're going to see a bid and an ask. When we buy a stock option, there's a difference between anything, or the bag of chips example. So on the bid, if you market order into a trade, which there's not to jump off task, but there's a couple different ways you can enter a position. We're just here going to show you the way that we execute here at Beast Mode Trading. I just want to touch base on everything. The bid and the ask is the underlying spread, the difference. So if you buy one contract, the 338s for $207, and you market order in, they're going to force you to pay $212. If you buy this contract for $212 and in 5 seconds you want to market order back out of that contract, you're going to sell you out at the 207. So you just lost 5 cents here. Essentially, if you market order in, and the spreads normally ain't this large, but the volatility is a little bit higher, it's a 5 cent spread. Normally SPY's 1 cent or 2 cents. And just so you know, when you see like a 2.07, you times that by 100 or 1,000. But one contract would be $207. So yeah, you would take $2 and times it by 100, and that gives you what you're going to be paying for an option contract. If you come down here to the 0.06 and you times that by 100, you're only paying $6 an option contract, you know? And the bid and ask is also on the put side. It works exactly the same. If you market order in to a put, you're going to pay the ask, and if you market order out, you're going to pay the bid. There's always a spread there. Another thing we use, the delta, we use to estimate how much profit we're going to make on our option. The delta means for every dollar this share price moves in our favor, we're going to make whatever the number is roughly on the option contract. So for an example, if we buy the 340 calls at 93 cents and the delta is 30 cents, you can expect to make or roughly make 93 cents plus 30 would be $1.23. So if you buy one contract and this moves $1 on the share side in your favor, what you're going to make is about 30 cents. So it's roughly about 33% for every dollar it moves in your favor. Typically, you get a little closer to 60, 70% for the dollar movement. Today's a little bit different because, as you can see, look at the environment. Everything's red. So the IV and the volatility is higher today, you know. So, all right. What we do here is we wait for a highly probable signal. In this example, we're going to go to the SPY Crusher text alerts, and we're going to play it like we just got an alert. So it is 9:30 a.m. this morning. You see where you get an alert that says buy SPY calls, SPY Crusher alert at 9:30. So we're going to come here, and if you look at the timestamp, it's about 22 seconds. I'm going to come here, and I'm going to trade the contract for the call side because the call's on the left-hand side. I'm trading at the money or one strike out of the money. So wherever you see this purple shaded box in the money contracts, I'm going to trade in this example. I'm either going to take the 337 calls or the 338 calls. If your account does not allow that for the proper risk management side, you can break the rules and go down a little bit farther, but I will never trade a stock option that's under 60 cents. So my ideal range for a stock option is 60 cents to $1.50 on SPY, meaning that I'm willing to pay $60 up to $150 for every one contract. Typically, like I said today, they're a little more expensive because the IV and the volatility jacked up the option price. But like I said, for this example, we're gonna catch it right on right on the nail. So with you knowing that, we also have the open interest over here. That just shows us how many people's at the party. So you got the open interest over here. You have the delta. The same things are on the put side as the call side. So in 33 seconds, we're going to act like we just got this notification. So we didn't get nothing yet, and we still have 20 more seconds. I'm looking up here at the timestamp. So we'll trade this like we would be realistically. So it's we're sitting here waiting for a good signal. These get texted to your phone. So it's a great way to do it. And this is kind of just the way that I execute the trades, just to give you a little lesson. So we got, all right, boom. We got buy, SPY calls. So I'm going to come over here to the option chain, and I'm going to see what option fits my price. The 339s fit this. I'm going to click on the ask, and a screen will show up down here at the bottom. Oh, don't do this to me. Come on, TOS. There we go. If you click on the bid, this box will be red. When you click on the bid and you press the market order into this, you're actually selling an option and you're not buying the option. So when you trade with me and I day trade, make sure this box is always green when you initially buy it. So click on the ask price. It's going to be green. We're going to walk through it. You're going to see a spread. You're going to see a buy. You could buy or sell. These are the option contracts. We're just going to go with a one contract example. We'll change that to 1. And we see the SPY as our symbol. We have the 339 strike. It's a call because we got the buy SPY call alert. And we're going to come over here and change this order type to market. So we press confirm and send, and this window is going to come up. You're not in the trade yet. Once you press this send button, you're going to be in the trade. So I'm going to press send right now. All right. See where it says buy? I didn't get filled yet. Now I got filled. You heard that beep? It's going to say POS. Once I'm in the trade, I'm holding this trade until I say lock it in. So we're just going to pretend a simulated amount. We'll say 5 minutes goes by. Oh, look, it's 9:35 a.m. I'm locking it in. So when I lock it in, this is what I do in the meantime. I will come over here and I will right-click my position, create a closing order. I want to sell the call that I just bought, press sell. This is going to be red because now we're selling it back to the market, and you don't touch anything. You come over here, and you can put a trail stop. If you mark it out, that'll get you out immediately. I put a trail stop in, so I'm going to show you what I do. So this will bring up a trail stop. Okay. And I can change this price from 10 cents down here to 8 cents, 7 cents. What this means is that once I initiate this trail stop, it's going to trail the option contract. So if it moves in my favor, I'm actually going to be able to win a little bit more money. But if it moves against me, at least I have that stop where it's going to sell me out automatically, and it takes all my emotions out of the trade. So in this scenario, we're going to go with the 5 center. We're going to press confirm send. We're going to get another box again. And we'll just say, we'll pretend in 12 seconds, we're going to lock it in, like I'll lock it in. So in the meantime, I have this box open and ready just because we don't know how fast this is going to move. Oh my goodness, look, it just moved in our favor about 60 cents. All right, I'm typing it in, lock it in. So now I'm pressing send, and guess what? I'm in a trail stop right now. I don't have to do anything. Still in a trail stop. So it's moving around, and once it hits my trail stop loss, then it's going to sell me out. So in this example, I'm still in trade. So it's moving in my favor, and I'm actually making more money than what I should be. So, and at that point, you don't have to do anything else. Guess what? Just sold me out of the call contract. So I just won on that trade, and that's how we execute here at Beast Mode Day Trading. I'm going to walk you through one more time. What I like to do is when we're day trading, that's a text alert. If we're day trading, waiting for one of our signals to appear, we're now in an uptrend. Well, technically not, but let's just say this prints and we're in an uptrend. I'm going to go up here and I'm going to choose a contract that fits my desired range. So I'm going to click the ask price again, not the bid, and I'm going to leave all this the same because I want to take 10 contracts, and I'm going to press market order. I'm going to press confirm send, and this box is just going to wait here. So another simulated way, we're going to say in say we get a signal here when this candle closes. So we're going to wait here for another 40 seconds. We'll fast forward, and let's just say we got a signal right there. I already have my box ready, open to roll. So the second that thing hits 58 seconds, I'm going to press send. So we still have another 20 seconds. So we're watching. So it's at 44, 45. If this signal is here, which is in temporary mode, pretend it's there. We got the signal at 58 seconds. I'm gonna come over here and I'm gonna press send. What's my mouse doing? I lost my mouse. All right. So I'll press send right now. A little late, but just bear with me. All right. So we're in a trade now. So I immediately go in this position, create a closing order, and I press limit. I change it to trail stop. I change this to about a 3-4 cent. In this example, we'll go with 4 cents. I do 3, 4, 5 cents. Just depends on how much the option contract I paid for. I press confirm send, and I get this box ready to go. So meanwhile, while my order's working, once it moves in my favor, say my target was right here, and it didn't get hit yet. So we're not doing anything yet. Once this thing gets hit, I say, all right, guys, I'm going into trail stop or the text message side. I'm going to say lock it in. Those are my 2 cues that I'm taking action on my orders. So in this situation, we're just going to say, if this red arrow prints, we're locking it in. Oh, we're going to press send. Guess what? I'm in a trail stop now. All my emotions are out of the trade, and it's going to sell me out at whatever the market does. Oh, just sold me out right there. Guess what? I got another winner. So that's how we trade day trade the stock options here at Beast Mode Day Trading. Just kind of a brief little walkthrough, basic teaching on stock options and how easy it is to take a stock option trade. If you have any questions, please reach out, send us an email, and most importantly, we thank you for giving us your time. Hey, have a good day. Thank you.